Hello, everyone. We're going to get started. Thank you for joining this webinar on the California Opioid Settlements Expenditure Reporting Form for State Fiscal Year 25-26. My name is Chelsea Kelleher, and I work for Aurora Health Group, and we're going to be helping the Department of Healthcare Services facilitate today's meeting. Next slide, please. Couple of housekeeping items before we begin. If you have any technical difficulties during this webinar, please send a direct message to Abina Asari from Aurora Health Group, and she will help you get that figured out. Questions can be submitted at any time via the Q&A feature on your Zoom control panel. We will be saving Q&A until the end of the presentation, at which point folks will have the option to request to be unmuted and ask their questions, but you're free to submit questions throughout the presentation through the Q&A box if you would like. And then today's meeting materials will be available on the DHCS website following the webinar, and we'll send an email out to the listserv letting folks know when today's materials are posted to the website. Next slide, please. DHCS has provided informational webinars earlier this year that we encourage you to review. These provide information about the allocation of settlement funds, allowable uses of funds, and how funds are being used across the state. They're available on the DHCS OSF webpage. In particular, would recommend that you review the Opioid Settlements 101 webinar for any questions that are more about the background of the settlements or some of the different sub-fund account types and their requirements. So please check that out. And please keep in mind as well, if you are seeing archived webinars from last year's reporting session, keep in mind that today's session will supersede any of those, and this is the most up-to-date guidance that will be provided today. Next slide, please. Quick overview of today's agenda. During today's webinar, DHCS will provide an update on California's opioid settlements and bankruptcies and the reporting required. DHCS will then review the updated reporting form, focusing on elements of the form that have been changed or updated in the past for this reporting year. And then we'll review next steps for the reporting process that will be coming up. And then finally, at the end, we'll have an opportunity for Q&A with participants. Next slide. All right, and with that, I will turn it over to Heather Park from the Department of Healthcare Services, who will walk us through the expenditure reporting form and the changes since last year's form. Heather is the unit chief of the Opioid Settlements Oversight Section of the Community Support Branch for DHCS. So I'll turn it over to you, Heather.
Good afternoon, everyone. So as we go through, first we're going to start by providing a brief overview of the payments for this reporting cycle and review reporting requirements. Next slide, please. So as a reminder, DHCS oversight responsibilities include monitoring of the cities and counties for compliance, designating additional high-impact abatement activities, conducting related stakeholder engagement, and preparing annual reports. And DHCS does not make payments to cities and counties. All the payments come from third-party settlement administrators. Next slide, please. These are the agreements of the settlements and the bankruptcies and what DHCS has oversight of. Our full oversight is for Allergan, CVS, Distributors Janssen, Kroger, Mallinckrodt, McKinsey for the state-only payment, Publicis for states only, Teva, Walgreens, and Walmart. And then we have partial oversight over Endo. That is a bankruptcy, and that's only payments made to the state. And we do not have any oversight over the McKinsey settlement. Next slide, please. So these are the key definitions for the settlements and bankruptcies. We have participating plaintiff and California subdivisions. So we refer to California subdivisions as both California participating and California plaintiff subdivisions. A plaintiff subdivision is one that is located in California other than a litigating special district that filed a lawsuit on behalf of the subdivision or through an official act of the subdivision on behalf of the people of the state of California against one or more opioid defendants prior to October 1st, 2020. And a participating subdivision is one that is also a plaintiff subdivision and or a primary subdivision with a population equal to or greater than 10,000. Eligible California participating subdivisions are those California subdivisions listed in Exhibit C, excluding litigation special districts, and or Exhibit I of the distributor settlement agreement. And California subdivision also includes local governments, which are city and county participants in the Mallinckrodt bankruptcy. And a reminder that Mallinckrodt bankruptcy payments have concluded, but cities and counties may still be expending funds. Next slide, please. First, in this reporting cycle, cities and counties will be asked to report on payments and expenditures during state fiscal year 25-26, which ran from July 1st, 2025 and is concluding June 30th, 2026. Cities and counties must report on payments received from Allergan, CVS distributors, Janssen, Kroger, Teva, Walgreens, and Walmart. Even though the bankruptcy payments have concluded, if your subdivision has not yet expended or reallocated all of those Mallinckrodt bankruptcy funds, you must continue to report on your remaining balances, even if no new expenditures or interest earnings occurred in 25-26. Next slide, please. Cities and counties receiving funds from the opioid settlements and Mallinckrodt bankruptcy are required to complete annual reporting to DHCS. This includes any funds that are rolled over or unspent, encumbered, or expended. Reporting is not required for the McKinsey settlement or Endo bankruptcy. Cities and counties in receipt of McKinsey or Endo funds will not include these payments or expenditures on their annual reporting form. Like previous reporting periods, DHCS will review the submitted reports, prepare an annual written report regarding state, city, and county's use of funds, and host an annual meeting to share the report findings. This process will continue each year until all funds are fully expended and for 1 year thereafter. DHCS is currently working on the annual report for state fiscal year 24-25 and will produce a similar report for future state fiscal years. And one more reminder that the California state fiscal year is July 1st through June 30th each year. Next slide, please. This is just a quick overview of our report monitoring process. Once DHCS receives the report, we begin our review. If we identify corrections that are needed, or if we do not identify any corrections needed, we will still have a meeting with each city or county to go over their report. At that point, if corrections are required, the city and county will receive a revision link and submit the revised report. Next slide, please. Next, there are several details we would like to note for cities and counties before we walk through the 25-26 form. Next slide, please. The state fiscal year 25-26 expenditure reporting form will contain the following structure. First, the cities and counties will include contact information for the individual completing the form. And please remember, do not use personal contact information as these are going to be made public. This includes phone numbers and email addresses. Where applicable, cities and counties will be asked about their total payments and interest earned from the California Abatement Accounts Fund, the California Subdivision Fund, and the Mallinckrodt bankruptcy. Where applicable, cities and counties will be asked about any reallocations to or from another participating subdivision. Cities and counties will then be asked about their expenditures from the California Abatement Accounts Fund, California Subdivision Fund, and Mallinckrodt bankruptcy. The form will end with an attestation section where the preparer will sign and submit the form on behalf of their city or county. Next slide, please. Similar to last year, only one person should prepare and submit the expenditure reporting form on behalf of their city or county. The preparer does not have to complete the reporting form all at once. The reporting form can be returned to if the same browser is used and if cookies in history have not been deleted from the browser. We encourage cities and counties to have the data saved elsewhere prior to entering their information in the reporting form in case there are any technical glitches with saving. A Word version of the reporting form will be provided so your cities and counties can collect all data before entering it into the online reporting form. Please note that all the reporting must be completed online. The Word version that we supply to you is just to help you in gathering that information and cannot be submitted in lieu of the report. Next slide, please. In addition to this presentation, there are additional support documents available to cities and counties. It is recommended to review the reporting form Word document and collect all data before starting the online reporting form. The necessary materials checklist can serve as a guide for the information you need before starting the form. The Q&A document has questions DHCS has received regarding the form and answers that we have provided. Exhibit E outlines allowable opioid remediation uses. And finally, a list of payments to participating subdivisions can also be found on the DHCS OSF webpage. Next slide, please. Now we will walk through a preview of the online expenditure reporting form. Next slide, please. A plaintiff subdivision may agree to use its share of California subdivision funds to pay for fees or costs incurred by its contingency fee council, state backstop agreement. Plaintiff subdivisions were notified last year for state fiscal year 24-25 that they were required to attest to the accuracy of the total backstop payments sent to their council. Beginning with 25-26, this annual attestation process will no longer be required. DHCS will report aggregated backstop payments in the state opioid settlement expenditures, state opioid settlement annual expenditures report. So those are the different sections that we're going to be walking through. And go to the next slide, please. So this is section 1, and it's going to just ask for your general information about your city or county and about the person who's preparing your report. Next slide, please. Section 2 asks you to select whether your city or county received funds from the opioid settlements. Additional settlements have been added to this list to reflect new payments that have been made in fiscal year 25-26. As a reminder, you do not need to select the specific settlements, and you just need to select a yes or no to receiving any of the settlement funds listed. That's a slight change from this year, or from last year. This section will also ask your city or county to indicate if it is a plaintiff subdivision. If you have questions about your city or county status, please contact your city, county, or outside counsel handling opioid matters. If you have any remaining unspent or unallocated Mallinckrodt bankruptcy funds, you'll be required to report that in this section. A reminder that you must continue to report on these funds until they are fully expended. Lastly, this section will ask if you have deposited any funds into an interest-bearing account. If yes, you should list the total amount of interest earned on all funds from settlements and bankruptcies combined during state fiscal year 25-26. Next slide, please. Section 3 will cover any reallocation of funds between cities and counties. Reallocations do not include funds redistributed to a county by Brown-Greer due to a city opting out of direct payment. The year of initial disbursement from Brown-Greer will be used to calculate periods of expenditure for spending all of the reallocated funds. As a reminder, funds will need to be spent or encumbered within 5 years of the initial disbursement or 7 years for capital outlay projects. Otherwise, they are at risk of being returned to the state. Next slide, please. Section 4 collects information on all activities and programs funded by the California Abatement Accounts Fund during state fiscal year 25-26, including which Exhibit E opioid remediation use applies to the activity or program. For each activity or program, you must report the total direct and indirect cost expended. You will also have to report if any previously reported encumbered funds were used for each activity or that are being encumbered during 25-26, and if yes, how much. DHCS assumes that all expended funds are being spent from the oldest available funds from each settlement. Next slide, please. Section 5 collects information on all current opioid remediation activities and programs funded by the California Subdivision Fund during fiscal year 25-26. You will be asked to select which of the three categories within the definition of opioid remediation most aligns with your expense. The definition for opioid remediation can be found in the national settlement agreements and may include projects that address the misuse and abuse of opioid products, treat or mitigate opioid use or related disorders, or mitigate the other alleged effects of, including on those injured as a result of the opioid epidemic. Next slide, please. Section 6 covers any California subdivision funds spent on past opioid remediation activities, including legal costs. Next slide, please. Section 7 collects information on any Mallinckrodt bankruptcy funds spent during fiscal year 25-26. You must report if your city and county ever received Mallinckrodt bankruptcy funds and any portion of those funds remained unspent, unreported, and not reallocated in prior fiscal years. As a reminder, Mallinckrodt payments have concluded and no future payments are expected. We encourage cities and counties to spend their Mallinckrodt funds because once fully spent, you will no longer be required to report on those bankruptcy funds. Next slide, please. Lastly, Section 8 will ask you to attest to a few items. First, that you read and understood DHCS's reasonable administrative cost policy. Next, that the expenditures from the California Subdivision Fund were spent in accordance with applicable opioid settlement agreements. And that for Mallinckrodt funds, the administrative expenses did not exceed 5%. Finally, you're attesting that all of the information that's submitted is true and correct. Next slide, please. For next steps, we go on to the next slide. The reporting link is going to be open starting Tuesday, July 1st, and it will be sent to all the city and county contacts that we have currently listed. If you do not receive a link on July 1st, please reach out to osf@dhcs.ca.gov. Only one reporting form should be submitted for each city and county, even if there are multiple projects or people involved. Please communicate within your city or county to identify a preparer and ensure that only one report is submitted. The reporting form will stay open through September 30th, 2026. Next slide, please. DHCS will host 2 expenditure reporting form Q&A sessions at 1 p.m. on Thursday, July 16th and Wednesday, September 9th. These Q&A sessions are intended for cities and counties preparing their reports and will focus on questions related to completing and submitting the state fiscal year 25-26 expenditure reporting form. Cities and counties seeking guidance on the eligibility of opioid remediation activities should submit a technical assistance form, which can be found on the Opioid Settlements webpage. Broader settlement, bankruptcy, or policy questions can be directed to the OSF inbox at osf@dhcs.ca.gov. Next slide, please. More information on opioid settlement funds or additional resources can be found by visiting the DHCS OSF webpage. For any questions on today's presentation, please email the OSF inbox, again at osf@dhcs.ca.gov. If you would like technical assistance related to the opioid settlements and bankruptcy, please fill out the TA request form, which is also located on the webpage. And thank you for attending today's webinar. Next slide, please.
Great, thank you, Heather. So at this time, we'll move into the Q&A portion of the session. So we'll transition to our Q&A portion, keeping in mind that we'd like to limit topics related to the reporting form for today's session. As Heather mentioned, there are a number of resources on the DHCS OSF webpage that we encourage you to review if you have questions about the background of the settlements and rules for different fund types. There are 2 ways that you can ask your questions today. You can either drop them in the Q&A box and we will read them out loud during the session. Alternately, you can raise your hand to be unmuted and we'll go through and unmute folks to ask their questions. So while we're waiting for folks to raise hands, I'll go ahead and ask the first question that came in from Nadia Martinez. And Nadia asks, can you repeat about when we are required to report if we didn't incur or expend funds in the current year?
Yeah, hi. Hi, Nadia. So any fiscal year that you receive funds, you need to report on those funds, even if you didn't spend any of them, as well as if you have funds from previous years that you received and you still have not expended those funds. So say you were a participating subdivision when these payments started back in 22, 23, and you still had funds during that you have not expended from that time. Even if after that you have opted out of payments or you have reallocated future payments, but you still hold on to any of that money, you will still need to report every year until the money is expended, encumbered, or reallocated, or once 5 or 7 years have passed, it will be transferred back to the state.
Great, thank you. The next question comes from Crystal Bennett. We have awarded funds through an RFP process, but contracts will not be executed and payments will not be made until after July 1st, 2026. Do they need to report those as encumbered in 25-26 or reported as actual expenditures in 26-27?
Hi, Crystal. So if you have actually entered into contracts through the RFP process with these different agencies, then that would be considered encumbered. And so you would report them as encumbered. If you have not, and you have just begun the RFP process, or you have not initiated any contracts that encumber the funds, then you would not report that until the funds are actually encumbered or expended.
Great, thank you. Feng Li asks, is interest still tracked by abatement or subdivision? They were under the impression that it's combined now and reported as one total only.
Yeah, hi. So the interest is now reported just as one lump sum. We did initially start out having to track it individually, but we decided we would just make this easier on everybody and just include it as one lump sum. So you'll just report in the payment section one total, and that should be inclusive of all of your payments. And it should also only be the interest earned for that fiscal year. Please don't include any interest from previous years unless it was not reported before. If you've already reported it, you will only report now for the current interest.
Great. And another question from Christina Fleming. And the question is related to Section 5, which is about subdivision fund expenditures, where folks are required to select what opioid remediation type their expenditures fell into. And Christina asks if they can select all of the options in that section.
Hi, Christina. Yeah, you'll only be able to select one option. So whatever your activity is, select the option that best matches that activity. And the same is true for California abatement accounts funds and those expenditures. You will only be able to choose one Exhibit E category. And if it is HIAA, you will only be able to select one HIAA.
Another question from Daniel Ethan Hopley. Daniel asks, do we include distributions based on date of notice from the directing administrator or based on the date that it is, I think that this abbreviation means the date that it actually hits their account?
Yeah, so on our OSF webpage, we have a section where you can go and you can find payment information that is supplied to us by Brown Greer. And in that, it'll have a list of all of your payments where you can filter it for all fiscal years or narrow it down by fiscal year. And those payments all have a date attached to it. That date is the date that's provided to us by Brown Greer, and that's the date that you should go by for your reporting.
Great, thank you. And just want to put in a plug as well. I know folks are putting a lot of their questions in the Q&A box. If anyone would like to clarify a question that they've asked or ask your question coming off mute, please raise a hand and we will come and unmute you. So the next question is from Jill Louie. How can we know what expenditures were reported and ensure DHCS tracking of expended funding aligns with our records?
Hi, Jill. So every city or county is assigned an analyst, and you should already be in contact with that analyst. If you're not, and you're not sure who that is, you can message the OSF inbox and you can make sure you're connected. But all of that communication should be occurring on a regular basis with your analyst. Every single year, each analyst will have a meeting with all of their assigned subdivisions. And at that time, they'll go over the current report. You can make sure that you don't have any changes or updates for anything that you had previously reported. And you can confirm that everything that you show in your records aligns to what we have.
Great. And then Adriana Magallanes asks, do expenditures have to be broken out and reported by distributor? So I think her question is asking if cities and counties are required to report by settlement type or altogether.
Hi, Adriana. So the only separation that you'll be doing is based on whether the funds are an abatement account fund, a subdivision fund, or a Mallinckrodt expenditure. It doesn't matter if it was from distributors, Janssen, Kroger, within each of those. You're going to be just reporting the specific amount for the activity from each fund type.
A question from Michelle Berry. If a county has reported spending the entire Mallinckrodt allocation, but still has interest earned on those funds available, should any expense of those interest funds be reported under the Mallinckrodt section?
Hi, Michelle. Let me reread your question really quick, just so I can make sure I'm understanding. If a county has reported spending the entire amount of allocation but still has interest earned on those funds. Oh, I see. So you reported expending all of your funds from Mallinckrodt, but you also reported interest in your previous report. So the way that DHCS has chosen to handle interest is you can kind of think of it as a bit of a savings account, so that if there's a time when you report over expending funds that you've received, if you have interest, then we will apply any of that interest earned at that point. So you do not have to report anything different or special from Mallinckrodt. All of the interest earned will fall under the blanket of needing to be used for opioid remediation under those three main categories. Address the misuse and abuse of opioid products, treat or mitigate opioid use or related disorders, or mitigate the other alleged effects of, including on those injured as a result of the opioid epidemic. That's the overall definition of opioid remediation. And that's all that the interest earned will need to be allotted to.
And a question from Sinai Gonzalez. For admin expenses, is it 5% of how much was expended per year or 5% of what we've received that year?
Yeah, so for 5% is speaking specifically to the Mallinckrodt distribution, and that's very specific, that the amount expended on admin or indirect costs has to be 5% of the allocation for the project.
All right, that takes us to the end of our questions that are in the Q&A box, but I want to pause for a minute to see if other folks have questions or if anyone would like to be unmuted to ask their question. Oh, and Nadia, you are unmuted to speak.
Hi there. Thank you for taking my questions today. My first question is regarding a project that has multiple components, and the different components are funded by different settlement types. So I can think of one specifically that is using both Mallinckrodt and then it's using some of the other funds. Is the reform going to allow us to account for the different types of indirect we're using? Because there's multiple components, so it's not straightforward.
And so you're asking specifically about the indirect costs associated with the project?
Yeah, so for example, let me give you, we have an advanced provider response unit that responds to overdose calls, and then they do the linkages to connect them to therapy and into treatment, and they do all the coordination. So for that particular program for the APRU, we have multiple things running. We're funding the nurse practitioner, who we're paying for by contract work. We have the paramedic captain that we're paying for, who is actually a city staff. We also are conducting a study to provide to the general knowledge base. And so all of that is one giant bucket, but we're paying for it from different sources. So how does that work when it comes to the interest?
Yeah, so
because we're not reporting it by activity.
Right. So for the amounts that you expend on that project from the abatement accounts fund, you will only be able to claim 10% of that allocation to those funds. And with Mallinckrodt, the same applies, but the cap is 5%.
So then I would have to break it out by activity, then not just program.
There are different reporting sections within the form that will have, like, the abatement accounts fund expenditures. So you would put that program in there, and you would put how much the abatement accounts funds that you expended on it, as well as the amount of admin costs from the abatement account funds that you expended up to the 10% max. Then there's the other section that will talk about activities that you use subdivision funds on. I think the difference in the next sections is that we don't ask for specific activity description. We just ask for how much was spent, which did it align to, which opioid strategy did it align to. And then with Mallinckrodt, same thing. We'll ask, where does it align with Exhibit E? How much was expended? And then we'll ask for how much of the amount from those funds was spent on the admin costs. So you will have to break it up by those different amounts, but you won't have any activity description on the other two sections.
Got it. Okay. Okay, that works for now. And if I have any questions, then I can always reach out or ask the questions during the office hours. Also, and then thank you so much for that. And then I have another question. Will the form this year allow us to backtrack, or are we going to be locked in like we were last year? And
yeah, so I can tell you generally there are sections that you can backtrack within, but once you get past a certain point, then you can't. We do have Diane on the call today, I believe, and she can speak more to the actual specifics of the form.
Hi, yeah, so unfortunately, just with how complicated the form is set up on the technical end of things, there are certain sections, like Heather just said, that you can go back and forth. You'll be able to see the back button, but there'll be a warning right before the section that you can no longer go back into. So once you see that warning, just make sure you go back through if you need to go back and double check everything. Otherwise, you'll just proceed on and won't be able to go back to certain sections. So just be cautious to read when there's a warning. But if all goes wrong, you can always get a revision link and refill it out. But of course, it's best to try to avoid that if you can.
okay, thank you. And then the last question is, can you repeat the date of the office hours?
Oh, yeah, let me see if I can remember that. It's going to be at 1 o'clock in the afternoon, and it's going to be on Thursday, July 16th, and then again on Wednesday, September 9th. And one thing I wanted to piggyback on from what Diane had mentioned about the reporting form. If you do go through the reporting form and you realize that you have made an error, please do not, excuse me, please do not go and start a whole new reporting form all over again, because it will create duplicates of your report and we won't know which one is accurate and which one is not. So if you do make a mistake and you cannot backtrack within that section to fix it, go ahead and finish out the report and then message your analyst to let them know that you've made an error and you need a revision link, and then they will go ahead and send you that revision link.
Okay, thank you so much.
Great, thank you. And just another add-on to that, in terms of completing the reporting form, there is a resource that's shared in the chat and on the DHCS webpage. That's a Word document version of it, so that you can collect all of the information that you need, have multiple collaborators contribute, and then when you go to fill out the form, you'll have everything you need. So hopefully that's a little bit more streamlined. And then just to mention for the Q&A sessions, once the reporting form is sent out, the link is sent out, the registration for those will also come out as well. So you'll receive those at the same time. Checking if we have any other hands raised. We do have another question in the Q&A. This comes from Juan Hernandez, and Juan asks, if there are no records of funds that have received earned interest, is it mandatory to report or calculate interest on those funds? So I think maybe, Heather, if you can speak a little bit to interest, is it a required thing for cities and counties to put their funds in interest-bearing accounts? And how would counties know about that if it is or isn't?
Yeah, so it is not a requirement to put your funds into an interest-bearing account. If you do, then you are required to report on the interest that you've received on those funds, but there's no requirement that you have to do that. If you do put it in an interest-bearing account, then whatever rate calculated, that's based on whatever account that they're in, and that has nothing to do with us. The only thing we require is that you report to us the total dollar amount of interest earned from that specific fiscal year.
I see Myra Gonzalez has requested to speak, so I'll ask you to unmute yourself and ask your question.
Hello, everyone. Hello, Heather. Myra Gonzalez here with the City of Moreno Valley. I just have a question about interest earned. Are there any spending deadlines associated with interest earned? I understand that the underlying funds must be expended within a certain period, but does that same time frame apply to the interest as well?
So there's not necessarily a specific time frame for interest to be expended. However, if you have expended all of your funds and there still is interest remaining, you're still going to be required to report on that interest until it is expended. So we would encourage you to spend your funds and spend your interest if available. So that way, once you are done receiving payments, whether it's the end of the settlements, payout, or you've reallocated or opted out, once you are absolutely done with expending your funds, then after that, you will be free of the burden of having to report. So, yeah.
Got it. Okay, thank you so much for clarifying.
I'm seeing a question from Isaiah Lilly, but I'm not sure I understand it. So if Isaiah, you want to come off mute and ask your question, it's also related to the discussion on interest. I think generally folks are kind of wondering about timeframes for expending interest versus the other funds that have kind of strict timeframes for that. And I'll ask you to unmute yourself, Isaiah.
Hello?
Hello.
Okay. I'm not used to, I don't use, I use Teams more than Zoom. So I think it might be, so I'm Isaiah Lilly, San Joaquin County. I think it might have been answered in the previous question. My question was basically, um, considering that interest, our at least interest in our county, they're in this, it's intermingled in the same fund with award funds, and so it kind of came down to the question of what would be considered spent first. Is that I would assume that if there's money available, it would count towards being spent as award money, unless we've expended more than what we've received, right? Um, when it comes to, because there's time limits, like the previous question came through, that if we had say $1 million in award money, and but our fund balance is showing 1.2 million, and then we start expending, and we've spent 900,000, but you get money every year. It would always be the oldest amount that's in there, because there's interest that's consistently always being added, and that was kind of what I was getting at. I think it's kind of what the previous lady was saying too, is that, so where do we draw the line with being spent out of there? Because we don't. It's really difficult to track interest unless you really are like journal entering out your interest to a different fund, which I don't know if anyone's really doing that. It's kind of just sits in that one fund, but then you just have to do a kind of a reconciliation on the awards that you've received versus how much do you have in the balance, and then the difference is your interest, right?
Yeah.
Minus expenses. So that's what
It,
I was asking. I know I know it sounds a little complicated, but I was just trying to understand that whatever is spent is considered award money essentially first. Like first in, first spent is first award received type of thing.
yeah. So from what I understand from what you're asking, it sounds like you're talking about the difference in how we pull from the funds that you have
Hmm.
reported to us. So yes, DHCS will always take oldest funds first. So we kind of look at your funds on this rolling account. If you have funds that are still left from fiscal year 22, 23, you have not expended all of those. And now here we are reporting for 25, 26, and you have an activity. We're always going to take from whatever the oldest funds are, so that you don't hopefully run into that hard deadline of the 5-year or 7-year expenditure time frame for each of the abatement accounts fund type. Now, like I said before, we treat the interest earned as kind of a separate entity because it does not have those time frames. So unless you have over expended from the amount of funds you have received, that interest earned is just going to stay on the sidelines. Does that answer?
Yeah, I think because I was almost willing to pull back my question, because I think it was answered by the previous lady about um, the interest being, the interest is comes essentially comes after, unless you, like you said, unless you've spent more than what you've been awarded at some time frame in between, getting your final award or getting your next award,
Yeah.
so to speak. So I understand it. I just wanted to make sure, because that's one thing that's somewhat difficult to track if we had to track it, and I haven't really been doing that. So I'm glad to know that it's just kind of like whatever your oldest is considered spent, as opposed, because we've received a lot of payments. I mean, at this point it's like year 4 or 5 or something like that. So I just wanted to make sure.
Yep, that's exactly right. And if you ever have a question about what we show and where you're at, just definitely stay in contact with your analyst. They're the ones that have the most up-to-date information and can get back with you right away with those kind of questions.
All right, thank you.
Yeah.
All right, I think that is the end of our Q&A. in the question box. I don't think we have any other hands raised. Oh, it looks like Nadia has one more question. We'll go back to you, Nadia, for your question.
Hi, thank you for taking it last minute. I do have one other question. Um, we are expending our funds and we've encumbered quite a bit of it. But given the length of time that the payouts are going to be made, are we able to encumber funds from future allocations?
No,
So that for no,
funds that you have received.
only that we receive. Okay, thank you.
I'm seeing another hand raised from Guadalupe Barrera, so I will go to you next.
Hi, I was just wondering, how do I find out who my analyst is?
Yeah, we can definitely put you in contact with your analyst. If anybody ever has a question, say you're new and you weren't given the information from whoever you were taking over from, you can always message the inbox. But Guadalupe, if you want to let us know what city or county you're with, we can go ahead and put you in touch with them at the end of this call.
Okay, it's Sonoma County.
Okay.
All right, and we'll go to Elizabeth Candelaria next. We're having some trouble with Elizabeth. Elizabeth, are you able to speak? Oh, it looks like her mic is not working. Please go ahead and type your question in if you'd like, or feel free to email the DHCS inbox as well. Just another couple of notes in the Q&A box about folks who would like to be put in touch with their DHCS analysts. So sounds like we have a few different cities and counties who would like to be put in touch with their analysts. And then Heather, as you mentioned, the analysts will get in touch with you after the reports are submitted. Analysts will reach out to the contact who submitted the form to set up a call and go over that information. But we will share the folks who are requesting analyst contact info with the HCS, and we'll have them reach out to you. All right. I'm not seeing anyone else in the Q&A box or any more hands raised. I'll just give it another minute in case there's any other questions. Oh, we have one from Cam Lamb. So Cam, I will ask you to unmute.
Hi, can you hear me?
Yeah.
Okay. So Heather, I think earlier you mentioned something about the encumbered, like say for example, like for next years, the 26th and 27th, and then we already have our new contract set up like in June. And is that we have to report those in 25, 26, or we report it 26 and 27?
So you are going to be reporting anything that you did with the funds that you received in state fiscal year 25, 26. So anything that just from that year or funds that you've received prior to that. You cannot report on any activities, encumbrances, anything from future funds. It can only be from the funds that are from 25, 26 or previously received funds.
Okay, so even we started like the agreement for the 26 and 27, we should report it in 26 and 27.
If the funds are not actually going to be encumbered until then you can report it in the following fiscal year. But if what you're saying is that you have current funds that are from state fiscal year 25, 26 or previous, and now within state fiscal year 25, 26, encumbered those funds for a project that is set to begin in 26, 27. You can
Yes.
record that encumbrance now because those are the funds that you are reporting on, and you have actually encumbered them within that fiscal year that we're reporting on. If that actual encumbrance, that process where you're stating that those funds are going to a specific project and you've created a contract or whatever, if that does not actually happen until after June 30th, 2026, then that would be the next reporting cycle because that would be the next fiscal year.
Yeah, so the actual work and the actual invoice is going to start it in July or August for July service. So maybe I should just report it in 26 and 27.
That's what it sounds like. You can follow up with your assigned analyst and they can talk about it a little bit more specifically if you have some additional details. But from what you've just shared, that's what it sounds like.
Okay, thank you.
Couple of other questions coming through the Q&A box. David Sessert asks, there was recently another settlement for the remnant defendants. Will disbursements under this settlement be reported through DHCS?
I am not aware yet of what that reporting structure looks like. I can pass it to Jenny to see if she has any further information on that. But as far as I know, we do not yet have information on remnants, and it's definitely not within the 25, 26 state fiscal year.
Yeah, that's correct. We'll have more information that we'll put out officially once we kind of work through those settlement agreements. But we'll give you ample notice whether or not there is reporting requirements for that.
And then another question from Daniel Ethan Hopley. And Daniel asks, does encumbering extend the 5-year use period?
So that's a good question. Technically, encumbrance does stop the clock. However, general contracting and proper use of funds in an encumbrance usually is tied to a very specific time frame for deliverables. And the expectation is that whatever money you encumber for that project is going to be used within the time frame of that contract. If at any point the project is no longer able to be completed, funds have to be unencumbered. At that point, the funds would revert back to their original date that they were received. And if it is past the 5-year or 7-year for capital outlay, then they would be subject to return to the state. So while we pause the clock on encumbrances, it's not quite the same as an expenditure where it stops the clock because they're now gone. We, as DHCS, we will still ask you questions about that project. We will follow up with it to make sure it is still running on track.
Great, thank you. I think that's all of our questions for today. So with that, I think we can move to the next slide. We already covered how to ask questions. Maybe hop back for just a minute, though. Just a reminder to folks, if you do have any questions about any of the topics that are covered today, the DHCS OSF inbox is a place to send some of those questions. A TA form is available if you have questions about specific use of funds. And as Heather mentioned, you can expect that reporting form link to come out next week. And please do reach out to DHCS if you don't see that come through your inbox. So thank you everyone for joining today and have a wonderful rest of your afternoon.